What is up, guys? I'm back again for another video. Um, as discussed in the last video, today we're going to be reacting to some Bitcoin YouTube. Today I chose Yahoo Finance, and we're just going to watch the video, and I'm going to be letting you guys know my thoughts throughout. As it adheres to, what's going on with like core chain and stuff, and should be interesting. Anyway, let's go.
To talk about that and everything else happening in the crypto news today on the Daily Wolf. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of all streets. Hard to do a show right now without talking about the historic short squeeze that we saw last week. As you know, we had billions and billions and billions and billions of dollars in shorts liquidated. But the big question coming into the week was, would we see some follow through? Would we see spot buying? Would we see ETF buying? Or would this be yet another technical move that would eventually fade away? The good news is, regardless of price, we have some of that evidence. Here you go. Yes, Bitcoin steadies above 79,000, price irrelevant. As ETF inflows hit longest streak since April. Bitcoin held its ground Thursday as spot Bitcoin ETFs logged an 8th straight day of net inflows, while altcoins drifted lower across the board. So to put some numbers behind this, approximately 2.8 billion has entered Bitcoin spot ETFs. More obviously if you include the...
You guys ever wondered, like, with all this liquidity flowing into these products built on top of Bitcoin, why are we still under $100,000? Like, we should be well above 100K with all these net inflows into Bitcoin and stuff. Just something, I had to point out, because there are people still believing that this thing is behaving the way it's supposed to, when in reality it's just another tech stock now.
Altcoins just during this 8-day streak. August inflows now exceed 3 billion, making this the strongest month of 2026. Now, you may remember, if you ever look at a Bitcoin chart, for Bitcoin performance, generally August is the worst month. But now we're seeing one of our best Augusts ever, surprisingly, here in the middle of the summer doldrums, with massive ETF inflows, confirming spot buying and interest following that short squeeze. Now, of course, the leader here is BlackRock's IBIT, which attracted 1.33 billion last week and recorded its greatest trading volume ever during a positive week. Now, importantly, there were down weeks. There haven't been many of them.
I couldn't really tell. I'm still hodling at a loss. Like, if all this money is pouring into Bitcoin, where's it all going? And that's why, this proof of work change is going to be so important, because we won't need to adhere to this nonsense anymore that they're always talking about. Nothing against this guy. I don't know this guy from here yesterday, right? He's always presenting for Yahoo Finance, and nothing personal against him. It's just the information he's being, given to read off the teleprompter. It just supports why Bitcoin is no longer Bitcoin, like core chain. It's Ethereum, it's BitCloud, it's BitDrive, because conversations like this can be had about it, and the average person isn't really going to know the difference. The average person isn't going to understand that Bitcoin isn't supposed to care about what TradFi and fiat world thinks of it. It's not supposed to capitulate and move like a tech stock. It's supposed to be its own thing, doing its own thing, not caring what's going on, and just trucking on. Right? Right.
Of them, but for IBIT, where it recorded more volume. Now, I think what's more interesting here, also coming from BlackRock's Mitchnick says macro case for Bitcoin is strengthening after record trading and positive week. So if you don't know, Robbie Mitchnick is the BlackRock head of digital assets.
So pretty much FOMO, right? What always happens, people are buying high to sell low later. And in case if any of you um are a part of that, just know that you're not actually supporting Bitcoin if you're buying the ETFs. You're not supporting Bitcoin by buying MSTR. You're not supporting Bitcoin by buying STRC. You are purchasing an IOU on top of the actual asset, right? But they've also made acquiring the asset itself completely KYC for the most part. Like it's easier to just go KYC and exchange your dollars for Bitcoin than it is to, solo mine it on your own. That won't be the case on the Blake 2B chain. And I'm super, super, super excited to start mining on the Blake 2B chain. Probably gonna have to hit up Connor's lab, but all the better. If it means I can get early Bitcoin similar to 2009, sign me up. I'm in.
In this article, he shared his outlook for Bitcoin after the company's spot Bitcoin ETF, IBIT, hit record volume for positive week. So
Again, we all just heard what he just said. Yet Bitcoin Bitcoin itself hasn't really jumped that much. Like what the price action we're seeing right now, everyone's blowing it over and making it seem like it's a big deal when in reality it's not. It's just the fiat manipulation of the price because of the abundance of paper Bitcoin in circulation.
he's saying that the macro case being that Bitcoin is effectively an emerging store of value alongside gold, that case is strengthening. So interesting.
Bitcoin has always been a store of value. It's not emerging as a store of value. It has always been a store of value. It's underutilized as a medium of exchange, but it also qualifies as a store of value. It's not emerging as a store of value. It is a store of value. So it's important to pay attention to the verbiage that these platforms are going to use. And that's why I'm doing this reaction series, because it's the intent is to enlighten the average person about the politics and the psyop and game theory that's at play here, right? I'll probably have to do a video breaking down exactly what game theory is and how that works. Yeah, I think I will.
Interesting. Something I keep saying on my shows, but every time price goes up, all of the narratives that everybody's been screaming about when nobody cared seem to come back in vogue, right? Bitcoin is no more a store of value at $79,000 than it was when we were screaming about it at $65,000, reminding us once again that the only thing that really matters for people to get in Bitcoin, sadly, is the price going up. The minute the price goes up, all of those bullish things that we talked about in the bear market seem to matter once again. But it is really a positive signal.
Pay attention, guys. Stay with me now. Pure NGU up discussion. Number go up discussion. Dopamine. That's it. We're not getting into the weeds of anything. All right. We're not ever actually going to discuss Bitcoin, like what's going on under the hood. Pretty much they're doing everything to connect what's going on in TradFi to Bitcoin itself, when the two in reality should never be in the same pot together. Bitcoin is here to destroy TradFi, but TradFi has captured Bitcoin. So because TradFi has captured Bitcoin, they're able to, produce commentary like this about it, because it is centralized through the core maintainers and miner centralization.
That gold moved and Bitcoin now traded like gold with a higher beta and actually made a larger move, with people talking about it being a hedge against all of the insanity that's happening on the fiscal side at Treasury with Scott Bessent. Now, a little inside baseball, if you haven't listened to any of my shows or interviews before, I had Anthony Scaramucci on years ago, and he told a story about how, I believe is in the lobby of a Four Seasons somewhere. And he bumped into Larry Fink, obviously the CEO of BlackRock. And Larry Fink effectively mocked him for being a Bitcoin guy. Maybe this was 2019 or 20, something like that. He said, "Are you really into this Bitcoin thing? I don't get it. It's a joke. Seems like a scam. Seems like a magic internet money." Larry Fink used to be very dismissive of Bitcoin. Then they hired Robbie Mitchnick, the head of digital assets, who's quoted here, and apparently he fully orange-pilled Larry Fink. And the next time Anthony Scaramucci bumped into Larry Fink in a lobby, he was talking like Satoshi Nakamoto, which he has continued to do now. It's the trajectory that most people go with Bitcoin. Even
Yeah. These were people that were never supposed to make it this far with Bitcoin. But again, core chain is not Bitcoin. What Blake 2B is about to do, Blake 2B is about to remind everyone what real Bitcoin looks like. And I stand firm on that. Like this is not Bitcoin. Like being able to discuss Bitcoin like some kind of Wall Street product is like Satoshi Nakamoto, he, she, they, them, like whatever, like they rolling in their grave at this news. If they could witness it, I'm sure.
Michael Saylor himself was dismissive of Bitcoin in the early days, tweeted about it, was against it. It's okay to have strong opinions loosely held, and Larry Fink is one of the loudest and most compelling voices in Bitcoin and in the world of finance, and his team at BlackRock continuing to push these very, very important narratives. Now, these are a couple stories I'm not
Very misleading narratives, like thanks to people like Larry Fink and Saylor, most people are just going to continue to miss the forest for the trees. Instead of going and just acquiring the asset itself, you're going to go acquire the ETF and IOU, MSTR, STRC, all IOUs built on top of Bitcoin, that don't do anything to help layer one, but they do everything to enriching uh, the the Wall Street actors and fatten their pockets and bolster their portfolios and whatnot.
going to spend too much time on, but they're sort of follow through from narratives that we've seen before. Core Lightning team sounds the alarm as AI uncovers critical flaws. I know this is going to be shocking, guys, but AI is completely unraveling our blockchains and our security at the moment. Right, so this is important because, to be clear, there has been no exploit, right? This is saying that there are flaws that could be exploited, but this is Lightning. This is the very popular L2 on Bitcoin that's existed forever, that many, many systems are built on, that allow you to send Bitcoin and other things cheap and almost instantaneously. Well, the core developers have sounded the alarm and basically said, stop running your nodes. There's an emergency update that will be coming available. So, I mean, telling node operators to take their Lightning nodes offline is a pretty big deal. This isn't Ravencoin.
Another attempt at centralization. That's all. It's just them narrowing the playing field even more, with attempting to do that. And, they will succeed because, you know, most things are possible now on Bitcoin, like centralization. So them eventually discouraging the average pleb from even being a Lightning node would be of no surprise to me. Like, of course they want to do that, centralize even more of it. Like it's just, it just further strengthens the point of this video today. The reason why I'm making this video, like it just strengthens it because that's what they want. They don't want us to have options. They want us as narrowly concentrated as possible so that they can monitor and dictate any significant moves, right? And the failure of BIP 110 I'm always going to go back to that, reinforces that. And it proves that for a long time, nodes have not been in control of the network. Okay. And when Bitcoin is working correctly, nodes work correctly, right? If 20% of the network signaled for BIP110 and without a URSF, a user rejected soft fork, it failed, then there's something wrong, right? Fiat culture has consumed core chain, and conversations can be had in the background, which is very fiat based, in order to, you know, push a narrative or push a consensus change through, right? And Sybil attacks. Yeah.
Or Harmony chain. This is Bitcoin Lightning. Now, once again, I don't want to be hyperbolic about it. Nothing's been exploited, nothing's been stolen. But I mean, this is a big deal, and it shows that, first of all, they identified it with AI, so that's good. So you have AI on the black hat side and the white hat side, but it's becoming very, very hard to have massive faith in technology. And unfortunately, in the crypto world, that means that you have to trust it.
Oh my God, guys, Bitcoin is not crypto. Bitcoin is not crypto. Okay. I'll probably have to do a whole video explaining why Bitcoin isn't crypto. And eventually I will. But Bitcoin is not crypto. Real Bitcoin is not crypto.
Technology with your actual money. This isn't just data or information. It's not just the internet, right? So we're going to see how all of this develops, but obviously a big issue here. The Bitcoin base layer obviously not affected. The warning applies to core Lightning, one implementation of the Lightning network. So the capacity already had massively declined, and maybe this is going to become a issue for Lightning. On the flip side, one of the biggest threats to crypto that we were talking about before AI was quantum. And Starkware researcher demonstrates quantum-resistant Bitcoin transaction. So here, what happened? Starkware says it has executed the first quantum-resistant Bitcoin transaction on mainnet. This transaction was...
This is good, right? Like something that's going to be beneficial for Blake 2B with core chain still existing is that anything good that's done onto the core chain, we're able to view it from afar, from a safe enough distance. And if it is entirely beneficial, we're able to port that over to Blake 2B. So, just another benefit of having two chains, with the point going to Blake 2B, because we won't have to think as hard about improvements. Like, we're always going to work on our own things too, but just the fact that knowing that core chain is there, and at least for the foreseeable future, they're going to have significantly more funding and backing, right? Not to say that their developers are better than ours. That I don't think so. I think Luke is the greatest thing to ever happen to Bitcoin, and I'm so glad that we have him. We're so fortunate to have him on our side, on the Blake 2P side. He's leading the charge, I think. But yeah, anything good done to core chain, it could benefit us, and vice versa, But it's core chain, so the UTXO set is continuing to bloat.
Mined in Bitcoin block 964,199 through Mara's Slipstream service. It used what's called hash-based security method designed to withstand a quantum computer capable of breaking Bitcoin's elliptical curve signatures. Wow, that was an absolute mouthful. But what's important is it worked without changing Bitcoin's existing consensus rules. This does not mean that Bitcoin is suddenly quantum proof. It means that this specific output was protected. To be clear, this was a non-standard transaction that had to be delivered directly to a miner, and this process currently costs several $100s, right? So I'm not mocking it. I'm just telling you that this is the first iteration, the first evidence that we can have a quantum-proof Bitcoin transaction without changing anything at the consensus layer. And that is probably something that we should be celebrating, right? I think it's important news. I'm happy that it's happening. I don't think anyone believes that this is the final solution to quantum, but it's encouraging that we are seeing solutions to quantum being researched and actually implemented. So I kudos to Starkware for getting this done. And Bitcoin's infrastructure is obviously facing increasingly complex threats here. But Coinbase is attempting to make Bitcoin useful for something very conventional, which is buying a house. So this was obviously announced back in March, but better.
Okay, I'll be honest. I think this is cool, but I've already read into it a little bit myself, and I've also watched this video before doing this reaction for you guys. Right? I'm gonna do my best to be very transparent on this channel. Like, if I watch a video and then I do a reaction to it, I'm always gonna tell you guys. I'm never gonna come into a reaction, and know the information beforehand and then tell you guys like I don't know. Like, I watched this and I vetted this video before I chose it for today's reaction. So just be mindful of that. But Bitcoin backed mortgages, I actually like. What I don't like is pretty much you have to put down like the value of 2 to 3 Bitcoin just to get the value of one and some change. That I don't like. It doesn't make sense, like numerically. Like, the math just doesn't add up for me. But if you are a millennial and you have a respectable stack and you want to get out of renting, you want a mortgage or something, hey, more power to you. I think this is very cool. But for someone who is overly informed like myself, like, I'm always going to look at this with a bit of a stink eye, like, I don't know, like, because Bitcoin's very volatile, like, what happens if it dips and, you know, you're liquidated? Your Bitcoin's gone. Brian Armstrong just took your Bitcoin. Fannie Mae just took your Bitcoin, or whoever's, supporting the mortgage. And then the mental gymnastics of all the extra paperwork you're going to have to wrap your mind around just to get this thing to work. They make it, platforms like Yahoo Finance, they do a great job of making these things seem like they're easy to do, when in reality, executing them is a completely different story. Now, I'm not saying it's not possible. I'm sure that there are people out here that have successfully done it, as I'm sure my guy right here will explain. But, you know, the average pleb like myself, um, at least if they're informed, they're gonna be able to look at this and abstain from it, I think.
And Coinbase announced general availability of first token backed conforming mortgage to expand homeownership access for a new generation of mortgage borrowers. This is important. So, listen, we covered the announcement when it actually happened, but these are true Bitcoin backed loans with no liquidation risk. Now, are these perfect? Absolutely not. Are there other versions of this in the market? Yes, my friends over at People's Reserve have incredible Bitcoin backed mortgage products. But Coinbase is the biggest name, obviously, in the crypto space. And the fact that they're opening this to their customers is absolutely massive. And there was a ton of demand for this. So I believe that their waiting list had about 200.
We all know the truth about Coinbase, though. Never trust Lex Luthor. Never. He tried to kill Superman. And I think he did in one of the movies.
60 million in projected loan volume before they actually opened the doors to this. So yes, this product got a wait list in June and is now generally available as of August 12th, but really being announced now. And what happens here is borrowers actually receive 2 loans. So you get a standard Fannie Mae conforming first mortgage that's secured by the home. So that's normal. What's different here is you get a separate down payment loan secured by crypto and a second lien on the home, and then you basically merge them and have one mortgage payment.
Yeah. And yeah, that sounds so exciting. I could only imagine um the kind of interest issued against something like that. Like, dude, is this what y'all want? Is this what y'all want? Financial products built on top of Bitcoin? Is this what the market has decided it wants? Bitcoin was designed to subvert all of these systems. How did it become a part of it? Like, serious question.
that you make. So they carry the same interest rate and amortization period and are combined into that one monthly payment. Now, what makes sense here is Bitcoin collateral must equal at least 250% of the down payment loan. If you're using USDC, it's 125%. So just to put some math on that, if you want to finance a $100,000 down payment, you would pledge $250,000 in Bitcoin or 125,000 in USDC.
You hear that? You hear that? You know how crazy that is?
So you are going to have higher payments, and this is going to carry higher interest. But this does solve the problem that many of us have faced of having to sell Bitcoin, take a taxable event just to be able to count it.
Okay, but if for all that for you to pay a higher interest rate and then the possibility of you being liquidated is always there, you might as well just go ahead and I don't think it's bad. I just think that the details surrounding it needs to be fleshed out more. You know, they're like just me sitting here with my simple brain, with my smooth brain. I'm already putting together a million different ways a Bitcoin backed mortgage could implode on itself, right? And I'm not that smart. I am average at best, below average even to some people, depending on who you're talking to.
Towards your mortgage. So you're effectively taking a second loan on the collateral for the down payment here, but there's no margin calls, no collateral top ups. Even if Bitcoin goes down massively, you are safe, which obviously makes this very different from other Bitcoin backed loans, which are very popular and very cool as well. So if you're a Coinbase One member, you receive a 1% closing cost credit capped at $10,000. So I find this to be
Yeah, yeah, because that's all you have to worry about, right? Just closing costs and escrow and everything, right? Never mind the high ass interest rate you're going to be paying just because you're backed by a volatile asset that Wall Street doesn't necessarily trust, but they just use to enhance their own fiat culture, right? Never mind that, you know. Come, stake your Bitcoin with us. Give us your Bitcoin. Trust us. We got you.
really, really good news. This is very, very important. I mean, it's funny that you can now use volatile internet money to buy a house at record prices with a 30-year loan. You know, what could possibly go wrong? But as long
30-year loan? Shit. Wasn't Trump talking about fucking 50, 60-year mortgages? You know how crazy that is? You pass away, your kids, your grandkids are still paying the mortgage. Again, like I'm sure he's not doing his own best to be dishonest. He's just reading what's on the teleprompter, and I'm sure injecting his own conjecture in between, sure. But yeah, it doesn't sound very convenient to to like execute. Like, why not go do like a VA if you have access to that, or a conventional FHA, or something like that? Seems a lot more straightforward than staking the hardest substance on the well, sorry, that's Blake 2B. That's not core chain. Sorry, I'm getting carried away.
As you can't get liquidated. Really, really, really powerful stuff here. So if Bitcoin become acceptable mortgage collateral, advisors and investment funds also need clear rules explaining how they can legally hold it and who can custody these. Luckily, we have a better chairman at the SEC here. SEC resurrecting U.S. crypto custody rule the previous administration failed.
Wow, what a convenient thing to do after the cold card hack, after hundreds, thousands, if not millions of Bitcoiners are spooked about self-custody right now. What a convenient thing to do. Wow, you would almost think what happened on August 8th was like a deep state level attack. Like, wow. Just funny coincidence. Funny contrast I'm like drawing here. Huh.
Failed to land. Gary Gensler didn't get this done. I'm shocked. In 2023, the regulator tried to narrowly restrict the places investment advisors could park clients' crypto assets, but the new approach is still shrouded in secrecy. So what happened here? The SEC has actually sent its proposed custody rule overhaul to the White House Office of Information and Regulatory Affairs, but we have not been able to read it. Now, if you're around for the Gensler era, you know that the last administration did not exactly make life easy for crypto enthusiasts in the United States, particularly for crypto companies. There were very strict custody rules. Gensler, in trying to push these rules forward, wanted it only to be qualified custodians to make sure that you could only push crypto into the biggest trusted institutions on Wall Street, and the crypto incumbents would be completely left out of that conversation. Well, he did not get this done, but they had this rule, SAB 121, that actually effectively did the opposite. It forced every custodian to not only have, if you had Bitcoin on the balance sheet, it was considered a liability, so they needed to raise cash on the other side to match those liabilities, and none of those custodians could hold it anyways. It was a complete mess. That was reversed by this SEC. Well, now, yes, this is shrouded in secrecy, but Atkins is calling this actually deregulatory. That was the term that the regulator used, said that this is deregulatory. Its stated objective is to clarify
How, Sway? How is this deregulatory? How, Sway?
crypto custody while removing outdated regulatory burdens. Sounds like a lot more companies are going to be able to custody these assets. And we all know, obviously, that the trust charters have been extended to a lot of crypto companies anyways. Now, a very quick mention just to follow up on our prediction market stories we've been telling.
Okay, and then from there he like gets into like prediction markets and stuff. I'm not even gonna entertain that. Um, yeah, here's a visual of my knots node. It's running plus BIP 110, and I got the Bitcoin Holy Bible here with me, the white paper itself. Um, but yeah, guys, I'm gonna keep doing this. I'm gonna keep reacting to the smoke and mirrors surrounding um, what is impersonating Bitcoin culture, because it's important that we're able to differentiate what's going on in SHA 256 land from what's going to be coming with Blake 2B land. It's very important that we differentiate the two, because if not, we're doomed to repeat the same mistakes we repeated on Core Chain on Blake 2B, and um, that cannot happen. It can't. All right, it would be very, very frustrating if that occurred, honestly. But yeah, I'll see you guys in the next one. Peace.